structure the whole thing. But maybe this is a stupid question, but we're making money while the thing is going down, right? The chart is
Yes.
going down. So we are buying high and selling low, if I understand correctly.
We buy low.
So we're buying like you cannot see my mouse, right? So
Uh,
if you go let's say you're buying at the bottom and selling at the top, right?
yes, that's the whole concept of trading. We buy low and we sell high.
Yeah. Oh no, then I understood. Then I was understanding you wrong by that part. Sorry.
We buy low and we sell high.
Sell high. And because in a bearish market, due to the market is fluctuating, you can buy low, sell high, buy low, sell high, right?
Yes, you can actually do that.
Okay. Okay. Now that's the only thing I wanted to ask because I think I understood you wrong in the previous Zoom. But
So
now I know. Now I know.
remember, our structure we are coming from, this is a lower high. This
Yeah.
one is our new lower low now. The same thing that
Yeah.
happened here, whereby we come from a lower low, we go and establish a lower high. Then from a lower high, we drop and we break the lower low, right? It's the same
Yes.
thing that we are now looking forward to happen this side as well. This side here. Right. This is the current market price. This current market price we analyzed from the daily. We actually drew this trend line from the daily.
Okay.
So we drew that trend line from the daily. If ever you were only focusing on lower time frames, there was no way you were going to draw that trend line. You were not going to see it. So we drew it from the daily. So now drawing it from the daily, we can actually see that this, if ever you follow internal structure as it was going higher, as it was going up, as it was going up, up. I showed you that internal structure was broken here.
Yes.
That break of internal structure, it's a first sign that we are now going to the opposite direction. It means most probably this is our new lower high
Mm-hmm.
because it broke this internal structure. The breaking of that internal structure, it means we are now establishing a new structure of new lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Up until
Yes.
we go on and break this lower low. Once we go on and break this lower low, we do the same thing. We have to break that internal structure. Once we break this internal structure, this is now our lower low. Once it's now our lower low, we're now going up higher highs, higher lows, higher highs, higher lows,
Yes.
higher highs. Same thing over and over again up until the overall higher time frame structure shifts. How do you know that it has shifted? For example, if ever it comes all the way to break the previous lower high, this one. If ever this market came
Yes.
all
Yes.
the way and broke this lower high here, you know that the higher time frame momentum is now shifted from being overly bearish. We are now overly bullish. So what we are looking at when we're going down is now what you will be looking at going up. Going up, it means you're now simply identifying more buying opportunities more than selling opportunities. Because if the momentum is going up, it means price is going to be going up more than coming down. So it means we can as well focus on the higher probability entries, which are going to be the buying opportunities. That is if we're going up.
Mm-hmm.
So in this case, we are still in a bearish market because we are still establishing major lower highs and major lower lows. So the structure, we have two types of structure: external structure and internal structure. The market moves from one external structure level to the next external structure level. For example, this was an external structure level. Where was the next external structure level? Was this lower high, this lower low here. So from there to here, we've established the move. In this case, if ever once we come here and respect here, that's an external structure level. That's our lower high. Where is our next external structure level? Is this lower low. From there, it means This is our ultimate target. As it will be going down. So it means as it will be coming down, once we get any lower time frame extra confirmations, like once you get those push pullbacks on lower time frames, those are your entry opportunities that you'll be taking advantage of as it will be going down. Remember, as it is going down, it doesn't go down in a straight line on those lower time frames. It will be going down, pushing, pulling back, pushing, pulling back, pushing, pulling back. So you'll be taking advantage of those pullback moments. Those pullback moments will be your opportunities to enter upon the breakout.
Okay.
You get the point?
So yes, I get a point. So when the external structure in this case touches a new lower low, which didn't happen yet because we stayed at the previous lower high, and
Yeah.
but we are still in a bearish trend because it's a lower low, lower high.
Yes.
Right now, let's say for instance, if it touches the lower low,
Yes.
that means that there is a new lower low external structure. Do you go back to the external analysis and do something right there, or you just take advantage of the new external swing low in the internal structure? Do you understand the question?
Can you come again?
So let's say for instance, right now there's a new lower low. So there's a new lower swing low, the major one. Do you go back on the daily to do something right there, or just you just advantage from the pullbacks in the internal structure?
Okay, so when it comes to analysis, it's always wise to, let's say, if the market has been moving in your direction for a very long time, you're going back to the daily just to see, are we still following the same analysis? It's also wise.
Yeah.
Because it will help you if ever there are any changes that have happened, you will actually see those changes.
Okay.
So that's the only.
Yeah.
That's the only.
There are the lines. Yeah, the lines will tell you then.
Yes, they'll tell you.
Oh,
So
okay. Okay.
once you've identified the overall direction, where we are coming from and where we are going on the higher time frame.
Yes.
That's the main point. For you to correctly identify the direction where we're coming from and where we're going on the higher time frame. And for you to actually accurately identify the correct external structure levels. Once you've identified those, all you're now doing on lower time frames is to wait for the market to approach your higher time frame level, which is your higher time frame zone. For example, here, our higher time frame zone, here in this case, this is the, according to internal structure, this is the high that broke the internal structure, right? This is
Yes.
our internal structure here. Our internal structure was broken by this high. So there are two possibilities or two case scenarios that can happen, right? The market can come even all the way and test this high. The high that broke this structure can be tested. Testing is just failing to break it. We can enter there. Stop loss above. After the rejection, we wait for the rejection. You enter your stop loss above, right?
Yes.
Or it can even come just below this high, just below here, which is somewhere inside this trend line, which is somewhere here. That's also another entry opportunity. Once it comes there, gives you a rejection candlestick pattern. Once you get that, you can actually enter your sales. Once you enter your sales on lower time frames, 30 minutes, 1 hour, 15 minutes, once you enter there, our ultimate target.
Yes.
Our ultimate target, what is our ultimate target in this case? Is this low, right? But it will not go down in a straight line. On lower time frames, it will be going down, pushing, pull back, pushing, pull back, pushing, pull back, pushing, pull back, pushing, pull back. So all those pullbacks are your opportunities for entry as well.
Okay, I understand it right now. So we're gonna look for an entry on a lower time frame, right?
Yes, yes, that's right.
And then you can see, because if you go, I'm just now visualizing it. If you just go on a lower time frame, sorry, you will see the pullbacks, and then you will entry right there, right?
Yes.
Ah, yes. Now I get it. I get it. I get it. Yeah, I get it right now.
Those pullbacks, you won't see them on a higher time frame.
Yes, yes,
The pullbacks of a higher time
okay,
frame, they are like that's an actual trend on a lower time frame.
yes,
For example,
okay,
in this case, according to a higher time frame, right?
yes,
According to a higher time frame, this is a push, right?
mm-hmm,
This is a
mm-hmm, yes,
pullback. This next one is a push. So you notice that this, what we are calling a pullback on a higher time frame. On a lower time frame, it's an actual uptrending channel.
yes, yes,
That's the difference between a higher time frame and a lower time frame. So it's just that the pullbacks of the higher time frame on a lower time frame, they're actually bigger moves. But then now, those pullbacks on the lower time frame, you won't see them on a higher time frame. If there are any pullbacks happening on a lower time frame, even here, as it will be going down, giving you those push pullbacks on a lower time frame, you won't even see them
okay,
if you're looking at a higher time frame only.
okay. So high times are actually pretty important, or the most important then. Mhm.
Yes, because that is where you get the main information, the main data that you need. You gather it
Yeah,
there from there, not from down here. It's not from the bottom going up. It's from the top coming down.
okay,
So
understood.
in this case, you see that our zone hasn't been reached, which is this zone, right?
Yes,
So even if we want to go to our lower time frame for an entry, let's say I want to go down to 1 hour, 30 minutes, 15 minutes. There you are waiting based on a higher time frame zone, not based on a lower time frame zone. This same zone, this is the zone on a higher time frame, right? If
yes,
you actually refine it, you realize that maybe it's somewhere around this region, right? So we are waiting for this market to push all the way into our zone. So even if you're on those lower time frames, which are your entry time frames, you also wait based on a higher time frame zone.
mm-hmm,
So once the market comes into our zone, once we get those rejections, we enter. Once we enter, you can actually use the higher time frames. If ever you want to realize maximum profitability out of a setup, you can use those higher time frame zones for your targets. It means you are actually going to hold that trade for a longer time because remember what I said, the market moves from one major zone to the next major zone. So if ever you're using lower time frame zones are minor zones.
yes,
If you're going to use lower time frame zones for your entries, it means you're also going to there's a whole lot of chunk of profit that you're going to miss out on.
yes,
You get my point?
yes, I get it.
Yes. So that is it. That is it. That is it. That is it. That is it.
Okay,
Anything else? Any question? Any question? Any
let me see,
comment
because
so far?
1 second, let me see. I had a, okay. Yes, I had two questions.
Yes.
The the candlestick patterns, where does that come like in action to say right now? So you just use that to confirm, or
It's just to confirm. Extra
it's just
confluent.
to confirm
It's extra confluent.
in extra confirmation? Okay. And you in the day three, when I was looking in the Telegram, you
Yes.
were drawing areas, like straight areas, right?
Yes.
Um, is it always you do that, or is it like a specific trend, or is this also like drawing areas?
Drawing areas as in what?
Because you were analyzing something and you were drawing like only straight areas, straight areas, straight areas, straight areas, straight areas.
Okay. So I think I was giving a certain
That
example.
yeah.
I think I was giving a certain example. I was giving a certain example whereby the market, remember, it moves from one zone to the next zone. One can actually use support and resistance, whereby you know that from this zone, it has to move to this next zone. From this zone,
Yes.
to the next. You can use that alone, but we are now looking in terms of probability and also in terms of the percentage of efficiency. According to the percentage of efficiency now, us combining quite various confluences, we have a higher probability profitability rate than someone who is using one confluence. In this case,
oh yeah, so now you have a more clear vision and version of like your analysis. That's what you're explaining?
yes, that's what I'm saying.
Okay.
For example, in this case, someone could have seen this as a support, right? The market was going down. As it was going down, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower high.
Yes.
Lower high there. Then here it failed to establish a lower low, right?
Yes.
And if you listen carefully, that failure to establish a lower low, for example, in this case, we're going down. That failure to establish a lower low, it means we're now about to reverse the upside. That's the first sign that you must notice and take note of, that we're about to reverse. So here in this case, one could have entered their buy here, their stop loss below. That is an unconfirmed buy. Unlike someone who is going to buy after the breakout of this lower high. The breakout of this lower high, we now have two confluences already. Failure to establish a lower low and the breakout of a lower high. Those are two confluences already. It means we now have a higher high, which is higher than this. And we now have a higher low, which is higher than this low. So in this case, someone who could have bought on this higher low, that higher low, how could you have also entered this trade using this trend line breakout and retest? There was the trend line, there was also the higher low there. Right?
Yes.
So that trade on its own, as we have the trend line, we have the higher low. We can also see that that's almost the same zone where that previous lower high, this was the previous lower high, right? Previous lower high. Once it was broken, we established a higher high, came back to retest the same zone. This was the same zone. Already I have three confirmations. Trend line break and retest. I have a higher low. I have a what? A support break and retest. Number four, I can also say I also have a bullish market structure. Bullish market structure is when we've now started establishing higher highs and higher lows. So me already, I have so many confluences, more than just someone who is using support and resistance. Someone using support and resistance, he only has this as their only confluence. But us, we have quite a number of confluences there. So the advantage of mastering how we trade and how we analyze and everything is that you can go to any market, any chart, anytime, any point. You can actually identify an entry opportunity. Here, I'm just giving you this entry opportunity. I just randomly chose this area, but I'm actually showing you how you could have made money on that particular area. I can choose. I can go anywhere here. I can go on any zone. Any zone. I can go on any zone. I can go on any zone and actually show you how to make money on that particular zone. So it's the same thing over and over and over and over again. In this case, same thing here. Same thing here. The most important details now. The most important point, the higher time frame levels, the higher time frame structure, the higher time frame direction. You must know it. Why? Because if you only come to 1 hour and you see this low highs, lower lows, lower highs, lower lows, these are internal levels, obviously. And you're not aware of the momentum of the higher time frame, right?
Yes.
You don't know how far these buys are going to push. Because if the momentum is going to the downside, it means the buying opportunities, they are not going to push that much. So in this case, that's why it's so important to have that higher time frame information. In this case, this was the previous lower, came, then here, it failed to establish a lower low. If you check all the way as it was coming here, it broke all these other lower lows. They were being broken. Here, it came and failed to break. First, the sign of reversal. You could have bought here. That's an unconfirmed buy. The second confirmed buy is after. Once we break this lower high, get a pullback. That's a confirmed buy that you can actually get. This is the almost similar trade to the one that I showed you there, whereby the zone here, this is the zone. This is the zone, broken, retested. Here, this buy is a much more confirmed buy than this buy here.
The previous one is risky because it can still go lower, right?
Yes, because it can do something like this. We are going down, we are going down, we are going down, we are going down. We failed to break. We failed to establish a lower low. Okay. We also failed to establish a higher high. So it can actually do something like a range. Then
yeah.
continue. That's
And
why
then you're stuck.
this is a risky buy. Before the break to the upside, this is a risky buy here. That's a risky buy before the break up here.
Yes.
So you get the point why I say you mustn't trade in a range.
Yes.
A range is simply a deciding point. Here, it's simply a battle between the buyers and the sellers to see who is going to take charge. Is it the sellers who are going to win or the buyers who are going to win? Sometimes it can even break to the upside and go up. Sometimes it breaks to the downside, depending on who won. Is it the buyers who won or the sellers who won? That's why you simply have to wait for the breakout. Wait for the breakout, then you enter after the breakout.
Yes.
In this case, the breakout was here. Breakout, which was also the break of this lower high. Retest. This one is a much more confirmed buy. Confirmed buy. Then your targets, you're looking to the left. Let's look to the left. Where's the left? This is the left. Looking to the left. Looking to the left. Someone can put this as their ultimate target. This can also be a target. This can also be a target. This can also be a target. So if you notice, this first target, which was here, was reached. First target was reached. You could have also used this. You would have also used this as your first target, looking to the left, looking from where the market is, right?
Yes.
You would have used this internal one. This is an internal one. This is an external one. Internal, external. You would have used this. Use this. First target, second target, third target, fourth target. The reason why didn't it come all the way to the third and the fourth target is because of the higher time frame information. The information that you would have missed on the higher time frame is the reason why it didn't go all the way there. On the higher time frame, you realize that the market was still in a bearish bias, and we were simply in a bearish market. And when you're in a bearish market, we always establish lower highs and lower lows. In this case, so it wasn't even going to come all the way to break those lower highs externally. So in this case, only these 1, 2 levels were reached, but it was still money. So these are what we call counter trends. Counter trends, these are trades that you take that are opposing the higher time frame of low.
Okay. It's much more clear now.
It's much more clear, right? In this
case,
you could have, as we were going up, remember, even as it will be going up, remember here, this is where we shifted this internal structure. Higher highs, higher lows, higher highs, higher lows. This is internal structure. Higher high, higher low. We failed to establish a higher high. First sign, we would have sold here. That's an unconfirmed sell. Then here we broke this internal higher low. That break,
Low.
we establish a lower low. Lower low, we pull back and establish a lower high. Here, there are two opportunities. Either you could have entered immediately upon the, after establishing this, obviously we expect a pullback. Our pullback can happen either into the resistance, or as you go on with the webinars, you realize that these pullbacks can also go as far as what we call a supply zone. A supply zone, this is also a form of an order block. An order block, this is simply a zone whereby the sellers, they actually initiated most of their orders, and they left for example, it's simply a bullish candle before the push down. The last bullish candle before the market impulsively went down. This is what we call an order block. As you'll be going on with the webinars, you'll get to that point. So either it will pull back into an order block or a supply zone, or in this case, whereby it will simply pull back into a support and resistance zone. So those are just different views, but they're all. So in this case, you could have either sold here. If you didn't sell here, you're also going to sell based on this trend line breakout. So this trend line,
yes,
this trend line, you could have drawn it like this: touch, 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 first touch, second touch, third touch, stretched, breakout. Where was the breakout? Here, breakout and richest of the trend line. Where do you sell? You sell there. Breakout in the richest zone. Where is your stop loss? Just above there. Your targets, you simply look to the left, looking to the left, looking to the left. Where is our previous low? Is this one. First one. Second one is this one. All the first and the second targets were reached. Can you see?
yes, I can see it. It's a little bit more. I understand it right now much better.
So you even if the higher time frame bias is bearish, right?
Yes.
Those pullback opportunities, you can also take advantage of them only after you have the solid confluences on your lower time frames. All you need to do is to know that how far is this reversal entry going to push to? Because if it's a reversal entry, it's never going to last as long as a continuation entry. A continuation entry, this is an entry that is in line with the high time frame momentum. So reversal entries, they don't hold for long than the push. I hope you understand my point there.
Yes.
So all you need to do when you are not entering those reversal entries, you need to be so strict and so tight with your targets. That's why you need to use these internal targets. These internal targets when you're entering these reversal trades. These internal targets must be your targets. Then for these trades that are in line with the higher time frame bias, these ones can hold as long as the higher time frame levels, and also you can also use the internal levels as well for the targets. So even if the bias on the daily is bearish, right?
Yes.
The pullback of those bearish, remember, it will be bearish, it will be pushing, pulling back, pushing, pulling back, pushing, pulling back. The push, you can make money. The pullback, you can make money. The push, you can make money. The pullback, you can make money. All you need is simply patience to wait for the market to come into the right zone and wait for those breakouts. For example, here in this case, you would have waited for the breakout to happen or the shift in market structure to happen. Let's say here you didn't catch this buy, right? Let's say you didn't catch this buy and you wanted to sell. You don't just sell anywhere in the middle. You wait for the market structure to shift from bullish to bearish, as well as for that trend line breakout. So that's where your only patience is needed, waiting for that shift in market structure and those trend line complete breakouts. That's where your patience is required. In this case, we're going down. Remember, your targets were reached: lower highs, lower lows, lower highs, lower lows. So here, after this lower low, we came on all the way to break the lower high. We broke the lower high here. That's why we broke this lower high. And after breaking that lower high, it just gave a slight pullback, then continued. Right. So those entries are also entries that you simply use normal basic support and resistance. This was a significant zone. If you look to the left here, it was a zone. It came, broke, retested, went above, didn't retest, came down, broke above, retest, 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 then went. So this was simply a support zone that was being retested, 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 retested. That's how you could have entered that buy as well, going up with
And
it, and you put
you
the
put
stop
the stop.
just below,
Okay, yes, that was my question.
just below. You don't put it far here. You do put it just below here, just below there.
Okay.
Your targets, you look to the left. Our highest point in this case, our previous highest point is here. This high is here. Our next is that one. So it reached this first level. That first level just actually reached all the way. It was reached. TP hit. You notice how many trades opportunities we actually could have taken just in this region. 1, 2, 3. 3 good trading opportunities that you could have taken just in this region. So
There is a whole nother there is a whole nother view that I have now.
So the higher time frame bias, that's the most important thing that you must first address. Once you have that one, you know where the momentum is going. When you know where the momentum is going, and you know your major zones on the higher time frame, once you have identified your major zones on the higher time frame, and you know that if ever on the higher time frame we are coming from a high major zone at the top, it means we are coming down. We are coming down, right? If ever we're coming down on the lower time frame, all you need are just confluences. Like if let's say, for example, in this case, we're going up, 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 higher, high, higher, low, high, high, higher, low, higher, high, higher, low, higher, high. We came and broke this higher low. The break of this higher low, we establish a lower low. After establishing lower low, you wait for the pullback into this trend line, which will establish a lower high. In this case, this was the lower high.
Mhm.
The highest point before the market went down. That's your lower high. So
Okay.
you could have actually sold here. Even here, you could have sold. Here, you could have sold. Where is your stop loss? Here, upon this trend line breakout. Remember, this is a trend line. Breakout retest. This was the first retest, right?
Yes.
Stop loss, you just give it room just above, right? You give it room there.
Mm-hmm.
You notice that it went all the way, didn't go all the way, came all the way now, back into the trend line. So in this case, you would have just, this trade could have either closed on break even, because as it will be going 1, 2, 3, almost 4 hours of holding a trade, you can actually shift your stop loss to break even. Then, even if it came and took you out here, it was fine because you're going to sell again there. Selling again here, your stop loss is above here. It went all the way, gave you profit. So there are other trades that will actually close and break even. There's nothing wrong with that. It's actually normal. It's actually normal for other trades to close on break even. Break even, this is where you don't make profit, you don't make a loss. They are normal.
Yes.
It's very normal. Very,
Okay, wonderful.
so that is it. That is it. That is it. Once you identify your higher time frame buyers, make sure you know your higher time frame zone. Once you know your higher time frame zones, whatever is happening on the lower time frame will not shake you and will not confuse you, because many people, they are confused by what is happening on the lower time frames because there's too much noise on the lower time frames that can confuse you. You might be confused that are we still uptrending or are we still downtrending? Yet you realize that we are still in the same downtrend, but just because the lower time frame is doing a lot of fluctuations and a lot of moves, it's a noise that can actually fluctuate your mind, and you might actually change your bias because of what is happening on the lower time frame, because of the noise that is on the lower time frame. But you need to make sure that you fix that daily bias, that higher time frame bias in your mind, and make sure that whatever fluctuations that are happening on the lower time frame, they don't shake you, or they don't even make you forget what you are aiming or targeting on the higher time frames.
And what is the lowest time frame that you go then?
Right. The lowest time frame that I advise you to go for now is 15 minutes. 15 minutes. 15 minutes, 30 minutes, 15 minutes, 30 minutes, play around there. 15 minutes, 30 minutes.
Okay.
Enter on those zones. 15, 30 minutes. 1 minute, 5 minutes, there's a lot of noise there. There's a lot of noise, there's a lot of manipulation. That's why you get fake breakouts. Fake breakouts that will not even be breakouts. So here,
Okay.
this was also not a simple trade, short-term trade that one could have taken. Because remember, according to our higher time frame structure, this is our lower high, right?
Yes.
According to the higher time frame, I said the market can come and test this before it goes. It testing this is just confirming that that's a solid lower high. So that pullback there, it was an opportunity to enter buys, short-term buys as well. Upon the breakout and retest of the trend line here, if you look at internal structure, if you follow lower highs, lower lows, lower highs there, this was the higher low. We broke this. After the break of this internal lower high, retest here, you could have bought here upon the retest.